Many of these social policies enacted, healthcare reform being, I assume, the biggest one, that would kill any long-term rally.
Cap and trade.
Cap and trade, Peter Schiff, all the spending.
Well, obviously that's going to make a bad situation worse, but we're even further out on the leverage limb than we were a year ago.
What is this debt obsession?
And rates are going to go up. They can't stay down.
Debt is the only measure of how we're doing.
The Fed has parked a lot of bonds on the books of the banks, and they're sitting on them. Let's not say we're all leveraged out. It isn't like, you know, the consumers haven't been working down their debt and all the rest of that.
They've gotten started, but they're nowhere near in good shape. We've been on a spending binge for a generation.
So how long does it take for the consumer to get back to where it was?
People aren't going to spend money for a generation? Come on.
No, we've got to save money. We've got to get our savings rate up to 10 to 20% and keep it there for a long time.
But Peter Schiff, how long?
Peter Schiff, did you look at the GDP data that was released this morning? There was an amazing thing which I want to throw out as a challenge to you. Do you realize that the consumption share of GDP hit all-time highs this last quarter? What that means is that this theory that the consumer is just completely falling off a cliff and will never come back, and we're going to be in 25 years of scrimp and save, has simply not shown up one iota in the numbers.
So it's an interesting theory.
As scientists, it's not in
we're digging
the
ourselves
data.
into a deeper hole. This is going to come to an end. You can't run an economy on spending other people's money. You run an economy on savings and production. We've got it completely backwards, and that's why we're in trouble.
And we're saving.
But we're not spending it. We're not spending other people's money. We're investing other people's money.
Let's make this
Where do you think we're getting
actionable.
this money?
Jerry Bowyer, what do you do right here based on what you believe about the market?
Well, if you're not in, you might want to wait for the next little correction before you get in, but I think we've got another little bull coming. And if you want to know where, I like technology because it's going to be a jobless recovery. Peter will get his inflation down the road, so you might want to start to get ready for that.
Peter Schiff?
Well, look, you can't be in cash and you can't be in bonds, so you got to own stocks. I just own stocks abroad. I mean, I think you got to be in Asia, you got to be in China, Hong Kong, Singapore.
Oh yeah, China.
You got to be in natural resources.
If America falls off the cliff, who's going to buy all of China's little lead paint toys?
Silver up 50 cents, gold was up $20. I mean, that's where you got to go.
Yeah, Russia and China, very stable. Great place to put your money.
How about
Who's China going to sell their exports to, Peter? Who is China going to sell their exports to?
They're going to buy them themselves. They're going to buy them themselves.
Oh, yeah.
Don Luskin.
I want to know, what is the China story if the U.S. isn't there to be a customer? The idea that all of a sudden the Chinese are going to turn into a consumer society is just simply wishful thinking. There's not the slightest bit of evidence for it. It's an idea, it's a theory, it's interesting, it's a great narrative, but where's the data?
They can buy their own stuff. There's 1 billion Chinese. As long as their government stops buying our bonds and stops suppressing their own currency, you're going to unleash massive purchasing power in China.
That's a big if. That's
not an if. It's a when. It's
coming. They're not going to do that. That's not in their own interest.
It is in their interest.
They've been buying massive amounts of bonds over the last 12 months and have had their exchange rate absolutely fixed against the dollar, and that's why once they stop buying those bonds and let the dollar fall in value against the yuan, we'll export a lot more to China, and they will sell a lot more in China.
What are we going to export? We don't have anything to export. They're going to export less to us, and they're going to consume their products themselves.
The most popular car in China are Buicks, but they won't let us make them there.
China is not El Dorado.
Don Luskin, what should people be buying or selling here?
Good Lord. I think the one place where it all comes together, where I think we could actually all agree, is I think on a global basis you should be buying natural resource stocks.
True.
Because no matter what happens, because the United States, we know for sure that we've got inflation in our future, right? I think we can all agree on that. So that's going to be good for natural resource stocks.
In our present,
we know that China is going to keep growing. It's not going to go into a depression. Whether or not it's El Dorado is another question. That's going to put pressure on resources. So the one thing that you know is going to work are resource stocks anywhere in the world.
Grasso, any ideas here?
Healthcare. I think most mutual funds are underinvested in healthcare, and as long as the Obama plan continues to be watered down, healthcare is going to be running into the year end.
But that's a big if, right? It's a big risk.
The more I hear talk coming out of Nancy Pelosi, I don't think it's going to be as watered down as we all hope on this panel, or 90% of us on this panel hope that it continues to be watered down the way it is, so it's a big if.
Well, we got to the August 1st hard deadline, and they missed it.
That's right, and if not, energy is where you want to be as well. It's not going anywhere. The alternatives aren't feasible at this point, and they're very subsidy-based, so I would think that energy and healthcare, you could probably make a bet going to year-end.
Peter Maurice, you get the last word. Any good ideas for investors?
Beyond commodities and healthcare technology, we're going to be investing a lot in technology over the next 2 years. I think those stocks will do very well.
All righty. Good discussion, guys. Thank you, Peter Maurice. We're letting you go. Everyone else is sticking around. So coming up, Banks and financials, do they have a place in your portfolio in the new bull market? Bank stocks are up over 100% in this rally. Dick Bowyer says they're just getting started. He'll tell us why when we come back. And take a look at this chart on the way out. We're going to show it to you here in a second. Right, there it is. There's the bank index. 117% since March 9th of 2009. Holy moly. You're watching the Kudlow Report.